Hi, Peter Jones, author, property investor, ex-chartered surveyor, and in this short video I want to talk about the things that we should be thinking about when we're applying for our buy-to-let mortgage. Because what I've noticed is that naturally most beginner investors or would-be investors, they go straight to the headline rate, the interest that they're going to be paying on the loan. But that's only one of many things that we should be considering when we're thinking about which is the best loan for us. So let's just think about some of the other things we should be thinking about. Well, first of all, there's fees. And if you've watched my other videos where I give you an up-to-date view of what products are available in the market, you'll see that some of the fees which come with the products can be quite hefty. 1,995, for example, is a fairly typical amount, or 2% of the loan, or whatever it happens to be. Each individual lender with each individual product will have a different fee basis. So we need to be thinking about that. Some products come with a fee, and some products come with no fee. But what you'll usually find is that if it comes with no fee, they usually load it onto the interest rate. So instead of paying, I don't know, 2.5% on the interest rate, maybe it's 3%, and they'll get the fee back over the 20 or 25 year term. So we need to be careful about that and not just be looking at the headline figure. Then we need to think about, well, what can we actually do with the fee? With some products, we're allowed to actually add the fee onto the loan. Now, why would we want to do that? Well, if I can, will add the fee onto the loan, because although I'm going to be paying slightly more interest over the 20 or 25 years, it means that I've got an extra £2,000 or whatever the fee is now, which I can use, and I can then use that to perhaps pay for the refurb of the property. And although, yes, over the 20 or 25 years, I might pay more interest, I'm confident that if I had that £2,000 in my hand, that because I could go and buy other properties, I could actually make more from that £2,000 or whatever the fee is than I'll be paying out in the extra interest over the 20 or 25 years. What else do we need to think about? Well, some products come with a free valuation. Other products you have to pay for the valuation, and depending upon how much the property is worth, that could be sort of typically £350. Similarly, some products come with free legal fees. The lender will actually pay your legal fees. But again, others won't. So if you have to pay the legal fees for the refinance, then you could be looking at, typically £1,000, depending upon the value of the property. Certainly sort of 600, 750 wouldn't be an unusual figure. Does the product come with a fixed rate for, say, 2 years or 5 years? And should you be going for that because it's going to be a little bit cheaper? Well, we need to take a step back and think, well, what are we actually trying to achieve here? Because if we're going to follow the model which I follow, which is refinancing the property after 6 months, the one thing I don't want to do is to tie myself into a 2-year or a 5-year fixed rate, even if it's got a lower headline interest rate, because when I come to finance at 2 years or 5 years, the lender is going to charge me a redemption fee, a penalty fee for coming out of that fixed rate period. So I don't want that. It's probably better in that instance to take out a variable rate and pay slightly more for the 6 months, knowing that I'm going to be refinancing in 6 months' time. And there's practical things like, what is the lender's minimum valuation? If the lender's minimum valuation is £100,000 and your property is going to be £75,000, then they're not going to lend to you. You have to go to a different lender, but you need to know that. But if you're going to then do a refinance and refurbish the property and then refinance after the refurbishment and add value to the property, can you push the property value above the lender's minimum valuation? So in which case, maybe it will work. So we need to think about that as well. Should we be going for a 75% loan to value product, or even an 80% loan to value product? Or maybe if we can get it and if it works out, what about an 85% loan to value product? And yes, they're usually a little more expensive than perhaps a 75% loan to value product, but there are times when it's very useful to take out an 80% LTV or even an 85% LTV if it means that you can get more of your money back out of the deal on refinancing and use that money to then go and buy another property. So we need to understand exactly what it is we're trying to achieve. Another thing we might want to consider is, how does the bank stress test the loan? Are they using 125% at 5.5%, or is it going to be 140% at 5.5%? And if you don't know what I'm talking about, don't worry about it, because I will do another video about stress testing shortly in the future, which will explain all of this, but I've covered it in other material of mine, and there's notes about this on my blog as well. So it's all there for you. But it's basically just the way that the bank makes sure that you can afford the loan or still afford the loan should interest rates rise. You don't pay 5.5%, they just stress test it at 5.5% just to make sure that if it ever got to that level, you could still afford to pay. But there are implications, because if you're buying a more expensive property, does the stress test then mean that you can't borrow as much as you want? Does it restrict the amount that you can borrow, which means that you then can't do what you want to do, or you have to put more of your money, your own money, into the deal? All of these things need to be taken into account. So I think you get the idea. I could go on and on and on. There's a lot to think about when we're thinking about the things that affect whether we want to take a particular mortgage or not, and it's not just on the headline rate. In fact, the headline rate can often be the least important part of what helps us to make the decision. But one thing which I've realised, having done this for sort of over 20 years for myself, is that there are so many different mortgage products out there. Pre-COVID, there were about 2,000 different buy-to-let products out there being offered by up to almost 100 different lenders. And each of the lenders has their own criteria. Each of the products come with subtle nuances like the ones we've been thinking about. So there's almost an infinite permutation of the type of buy-to-let product available to us. And this is why we need a good mortgage broker, because a good mortgage broker, a whole of market mortgage broker who's keeping an eye on everything and knows everything that's out there, and are doing this full time, because you can imagine keeping tabs, because the banks are constantly changing their products and constantly changing their criteria. It takes watching this full time to know exactly what's available out there. And a good mortgage broker will match you and your needs to the right mortgage product, which is why you should never, ever try and source your own finance. Always have a good mortgage broker. Now, if you haven't got a good mortgage broker, and if you want a recommendation, I'll be very happy to recommend my mortgage broker. All you need to do is email me, thepropertyteacher@gmail.com, thepropertyteacher@gmail.com, and I'll be happy to put you in touch with my mortgage broker. If you found this video useful, please like, follow and subscribe, and then we can keep in touch and I can send you even more great content. And if you come over to my website, www.thepropertyteacher.co.uk, and click on Learning with Peter, you'll find loads of great resources, including my best-selling home study course, The Successful Property Investor's Strategy Workshop, in which I'll take you through how I started my property business with literally none of my own money and bought £2 million worth of property in just 4 years and replaced my day job with passive income from the portfolio. It took me 4 years of trial and error to learn the best way to do this, but because I'm going to show you everything I did right so that you can copy it, and everything I did wrong so that you can avoid it, I'm sure you can achieve far more than me and far more quickly. So please visit my website for full details of this and all of my other resources. And until next time, here's to successful property investing.